You've probably seen them. Cheap plots of land popping up online for as little as 40 grand. In today's market, that sounds like a steal, right? Especially when property prices are climbing and interest rates are still biting, even after multiple cuts this year. But before you rush to snap one up, you should know something. Some of these so-called bargains are hiding a dark secret. Welcome to Australia's zombie suburbs. Places that look like the dream of affordable ownership on paper, but in reality, can trap buyers in a financial limbo. Here's what's really going on. Across the country, there are thousands of blocks that were subdivided decades, even a century ago. They exist on paper, but that's where the story ends. No water, no sewage, no roads, just untouched land that's often zoned non-urban, meaning councils have no intention of ever allowing residential development. And that's where many unsuspecting buyers get caught out. They buy a cheap block, thinking they've struck gold, only to learn they can't legally build on it or even live there. Still, not all investors see these blocks as dead weight. Some hold them as speculative plays, ultra-long-term bets that one day zoning might change or urban sprawl might creep in their direction. Let's look at some examples. North Arm Cove, New South Wales, designed in 1918 by famed architect Walter Burley Griffin, the same man who designed Canberra. This area was once imagined as a thriving seaport city. The city never happened. Today, most of the land here is zoned non-urban, meaning you can't build a house unless you already have a dwelling entitlement. Still, bush blocks here are selling for under 30 grand. And believe it or not, they're popular. Some buyers use them for camping or holiday escapes, seeing them as a small slice of coastal nature they can actually afford. Now, the waterfront area nearby is thriving. Homes there are selling above $1 million, proving that the right zoning and location can make all the difference. So as an investor, you could view these non-urban blocks as speculative land banking. But it's a very long-term, high-risk hold. Solomon Heights, Sunshine North, Victoria. Here's one that sounds too good to be true. Sub-$300,000 land with city views just 10 kilometres from the Melbourne CBD. But if you're picturing high-rise potential, think again. This area was subdivided back in the 1920s and rezoned industrial in the 1940s. 100 years later, it's still basically an empty paddock. No water, no roads, and no infrastructure. There are even endangered species on site, making development nearly impossible for now. Some investors are still holding on, hoping for a miracle rezoning, but realistically, that's unlikely in our lifetime. Burns Road, Estate, Altona, Victoria. This one's interesting because it sits in Melbourne's west, prime territory for industrial activity. The area was cut up into hundreds of lots in the 1920s, but was later rezoned industrial. Now it's in limbo. Too small for industrial use, too restricted for housing, yet investors are still buying. Recent sales show blocks moving for between $50,000 and $60,000. Why? Because even a block that's technically stuck can hold value simply due to scarcity and speculation. It's a long game, but sometimes that's exactly what property investors play. Cemetery Estate, Hastings, Victoria. The name alone tells you something's off. This one was subdivided in the 1960s, but became uninhabitable once a crude oil storage facility was built next door. The land is now deemed unsafe for residents and officially restricted. The local council has even been buying up these blocks. For investors, this one's a hard pass, unless you're speculating purely on future land repurposing, which is decades away at best. Helensburgh, New South Wales. Located between Sydney and Wollongong, Helensburgh has hundreds of undeveloped lots that date back to 1890. They're zoned environmental management, meaning they're protected bushland. Blocks here often sell for under $100,000, but you can't build on them. Still, they change hands every year, bought mostly by speculative investors hoping for future rezoning, even though councils have made it clear that's not on the cards. So what does all this mean for property investors? Well, these zombie suburbs are a reminder that not every cheap property is a good deal. Sometimes the cheapest land is cheap for a reason, and no matter how long you hold it, it might never become buildable. That said, if you're a patient investor with a long horizon, there is a niche strategy here: ultra-low-cost land banking. You're betting on policy shifts, infrastructure expansion, or urban sprawl eventually reaching these areas. It's not for everyone, but it's a reminder that property investment is about more than price. It's about potential, zoning, and the patience to wait for the market to wake the dead. Because in Australia's real estate landscape, even zombie land might one day rise again.